Hello everyone, Manish here. For a long time, I was sure that the market moved based on levels. If there was support and there would be a rebound, if there was a resistance and there would be a reversal for the breakout. The more lines due on the chart and the more it seems that I was controlling the market, but the more I traded only for levels and the more often I saw the same pattern. Everyone sees the same level, but everyone expects the same movement. Everyone enters by the book and the market does the opposite. So you wait for a rebound and it breaks through. You wait for a breakout and it comes back. And at the same point, I ask myself simple question. If levels explain everything to everyone, then why do most people lose at these levels? And then I realize the level is not the reason for the moment. It's just a place where the interest of money, the crowd, and big players collide. Today, I will show you what really drives the market and analyze three signals on real charts so you can see it by yourself. Movement is not born from a line on the screen. If you want to stop believing in the fairy tale that levels are everything and start understanding what really drives precise, subscribe to the channel. On my Telegram channel, I show you the market from the inside, how movements are formed and how big capital uses levels as a trap for the crowd. How to look not for pretty lines, but for life points and where money enters the market. There you will also find my trade analysis, exclusive materials, and the opportunity to connect the copy trading and an AI bot that helps you see the logic rather than getting caught up in noise. The link is below in the video, and now let's figure it out what's really behind the market movements. So look everything. If you're gonna look everything logical on this chart, the price reached a level and rebounded. It reached it again and rebounded. So the third time it broke through, and the trend actually begin now. So that's how they say it everywhere. Levels are the basis of the market. But if you remove the graphic noise and look at the essence, it's not the lines that create movement, but three things: liquidity, momentum, and participants' expectation. So basically, liquidity is our stop orders and pending orders, and crowd orders hidden behind obvious levels. So a large player does not need the level itself, so they needed those who have hidden their money behind it. Momentum is a force that actually moves the market. Sometimes the price peaks to the level nicely, but there is no volume behind it. So no continuations and the movement immediately stalls, and this is not a trend. So it is a spike provoked by the hunt for stops and expectations and news, fears, and the greed of the crowd. Sometimes everyone is waiting for a breakout and the market drops them on a pullback. Sometimes everyone is afraid to enter, and that's when the strongest movement begins. The level in this picture is just a gathering point. It's like a doorway. People just passes through it and it doesn't determine who enters and why. I stopped treating the level as magic line and started looking at who is behind it. But what momentum according it and what the crowd expects doesn't matter. So now let's move on to specific signals and then break them and down break by break it right on the chart. Classic picture, the price hit the level several times and the crowd is already. So remember, this line is serious resistance and everyone says if it breaks through, it will fly. At some point, the candle really shoots up and break through the level and form a new high. And this movement most traders enter into purchases and they see the breakout of the level, but they don't see what's behind it. And what interests me here, it's how long the price stays above the level and whether the momentum continues with the next candle, or how the breakout candle closes with a full body or with a long shadow above. Look, the candle shot up but closed with a huge shadow above and a body that returned almost to the level. The next candle is already lower and the momentum does not continue. So this is not a breakout. This is just a hunt for liquidity, and behind this level where sellers stops and buyers pending order, a large player allow the price and fly in order to collect all of this. And as soon as the liquidity collected, there is no point keeping the price high. At this point, I'm not trying to catch up with the moment. I wait for the candle to see the weakness of the product and see that the new high is not held and enter downwards. And who, like in the hope of continuation, in a minute or two, the market returns below the level, and everyone who plays stops behind the level becomes fuel for the movement. And this is the first example of the price moving not because of the level but because of the money of those who were like hiding behind it. Now, like just look at this, the other side. Here is a support level and the price has rebounded from in 3 times. At first glance, it seems like a strong zone. Beginners like love to buy from the level in such a picture, but let's take a more mature way approach. But the first rebound is strong, like with the price making a decent upward movement, and the second is shorter, so the third is barely noticeable, like each subsequent maximum after the rebound is like lower than the previous one. What does this mean? Like, so there are buyers, but their strength is diminishing. And each new approach to the level is a confirmation of like stillness, but a gradual depletion of demand. In this case, the level is not a support, but a cap that keeps the price in one place while a larger player carefully distributes the volume. At some point, buyers simply run out and the crowd habitually like takes from the level, and the market makes a sharp break downwards. In such a situation, I do not buy from the level as like depicted in the textbook, but I watch how the quality of the rebounder changes as soon as I see that the reaction has become weak. So, and it is clear from the closing of the candles and demand is melting away. I prepare not for a rebound but for a breakout. So the price breaks the level and consolidates below it, and here the logic is like very simple. I'm not with those who believed in the line. The third thing that really opened my eyes was the moment before the news. And many people think that the market starts to move when the news comes out, but in fact, large capital starts making decisions much earlier. So look at these sections, it seems like a normal sideways movement at the level, but the price goes back and forth and usually like nothing interesting. But if you look at closely at the structure, picture is different and the lows are getting slightly higher. The highs are like starting to narrow and the candles with long tails down are appearing more often, and the upward movements are becoming more confident than the downward ones. So this means that someone is carefully building up a position while the crowd is bored at the level, but then the new breaks and the price suddenly shoots in the direction that the big player had prepared in advance. The crowd says like the news moved the market, and in fact the news is just a catalyst and a reason for the sharp release of the position that has already been built up. So in such situation, I don't wait for the numbers on the calendar. I just watch how the structure changes before the news. And if I see that someone is methodically holding the price, that every pull is being bought up, so that sales are getting weaker. And I'm ready for movement even before the event. So, and when the market explodes, I'm already with it's not against it. Like this is the third actually example of how movement is not born from the level, but from how large players uses this level as a mask for their intentions. And here's what important to understand, like the market doesn't move because a line is drawn on the chart. It moves because there are stops and limits behind that the line. Someone is ready to buy or sell aggressively. A big player is using the crowd as a fuel. The structure like of the movement is ripe or for a phase change. The level is just meeting place, and but it is people and money that drive the market. Incidentally, like this week, the market changed more than it seems at first glance. Reuters like published a report stating that liquidity is in the US. The currency market fell by 14% in just one day, due to the mass exodus of automated market makers after an unexpected surge in volatility during the Asian session. What does this mean? When liquidity is thinner, the market begins to break level if that did not exist. Price move faster and breakouts become sharper. And false movements become deeper and the crowd sees a breakout, jump in, and 10 seconds later the market reversed because it wasn't a trend. It was a hole in liquidity. At that moment, I was just sitting on the chart, and when I saw a sharp gap in the candles with minimum volume, I realized that this is not a trend, it's a spike. I entered as a sale and trade, and the market literally fell exactly where there were no orders. Clean, sharp profit, and it's the real reason for the market movement. Not the level, but the money that stopped holding it. At some point, I stopped drawing levels as scared boundaries and started looking at what was happening around them. Who was standing there and where the crowd was hiding their feet. Where the big players were gathering liquidity, where the movement was just being prepared in advance. And where we were simply being shown a pretty picture. The market doesn't move because of lines. It moves because of the money behind them. And once you understand that, trading turns from a chaos into a system. If you want to analyze such situation with me in live, so go to my Telegram where I show real trades, analysis of structure and the logic of movements. Plus, I give access to an AI bot and copy trading tool so you can also watch, but also earn money with me. The link is below with the video. Like it and write in comments how you used to look at the levels, and see you in the next video.